But let's talk with Vimal Kejriwal from KEC International and talk about the latest order wins. Vimal, great to have you today on ET Now. Thank you so much for taking the time out. You've won this new order for about 1,213 crore rupees, and we understand across segments, taking your total order inflow also to an all-time high. Which segments would you say are driving growth at this juncture and contributing to your order inflows?
Asha, good morning. I think almost 90% of these orders have come from the T&D sector. Okay, and if you look at our year-end inflows for the year, it's around 22,000 and odd crores, which is 30% higher than last year. Almost 50% of the orders have come in from the T&D sector, and another 30% have come in from civil. So those are the two large sectors which are basically driving our order growth.
Profit margins, they remain constrained owing to the volatility in key raw material prices, as we understand, and especially for your international EPC contracts that are fixed price in nature. How's the margin profile been this quarter, and what's the outlook for the full year, if you could give us that?
So I'll not be able to talk about the quarter and this, but I'll tell you that the volatility has been there. Volatility is now subsiding. And what we have been talking about is that from Q2 onwards next year, not next year, now it's FY24 already, we will start seeing a good return to profitability. The volatility has come down, I'll say. Steel is now almost stable. And even if you look at aluminium, copper, they have been a little bit volatile, but within a band. So I think we are now getting comfortable with the supply chain volatility. And it has been baked into the new orders which we are winning in.
Okay, fair enough. Good morning, and just wanted to understand your margin outlook as well, because there was a weak performance of SAE towers and that did impact your margin. So what is the outlook on the status of completion of orders in the SAE loss-making project?
So what we had said was that in Q3 last year, we will complete all our loss-making orders, and which we have done. And now we have a large order book in SAE, which is all only for supplies. So, we had lost money in some EPC orders. So for the time being, we had stopped taking EPC orders. Right now, I don't have the exact number, but we have roughly around 17 or 1800 crores of orders in SAE, both between Brazil and Mexico, and all are supply orders. And I think we do hope that they will make decent money. What we have also said earlier is that we will be turning operating positive in SAE, and we should hopefully be PBT positive because there's a large interest cost which we are trying to restructure and work out. So from Q2 or maybe hopefully Q3, definitely we'll become PBT positive, in our SAE operations, including Brazil.
Talk us through what the outlook is on the overall margins in light of this. Where do you see them headed?
So margins will take some time, as I said. At least I think Q2 onwards we should start normalizing. Q4 would be a perfectly normal quarter. So I think we expect that by the end, when we exit the year, we should be back to close to double-digit margins.
How much of your orders, in a sense, are legacy orders, where you actually will start enjoying the uptick now?
So basically, Nikunj, the legacy orders are a few of them, but some of them are stuck in your, if you remember the GIB issues and all that, so we are not able to execute them. So in terms of volume and all that, very, very little. And whatever is there, I think Q1 is the area is a time when we will close everything, which is why I said that from Q2 onwards, we will start seeing a significant uptick in our margins.
Okay, fair enough. I just wanted to also get a sense from you as to your foray into new projects that you're looking at: hydrocarbons, green hydrogen, solar. What has the order traction been like over here? How are you looking at the overall mix for these new projects?
So in the new areas, if you look at civil, we got 4 orders in data centers. So that's one thing which is happening. And we have got a few orders in hydrocarbon, but still restricted to infrastructure. We still don't have orders in process units, etc. We are still building the capability there. So I think it will take some time for us to get orders into process units, etc. Okay, oil and gas is doing well. As far as green hydrogen and others and solar are concerned, we got a large 500 megawatt order in solar, I think a quarter back. And we are tracking other solar opportunities. And definitely we see some order inflows, and I'll say reasonable order inflows happening on the solar side in the coming quarters. Green hydrogen, I think the orders are still too small and too little. We are tracking them. We are working with some electrolyzer manufacturers, etc. But I think honestly, it's still far away that it will make a dent in the numbers.
Mr. Kejriwal, great to have you today on 18 Hour. Thank you so much for taking the time out and joining in.
Pleasure. Thank you.
That's the update coming in on whether, what a healthy and robust order book KEC International has right now.